Hello, everybody. I'm Michael Smith. Welcome to the Lowdown. And today, joining me, special guest and our head of financial planning, Robert Palmer. And Robert, today we're going to, the big question is crypto still a thing?
So, Mike, that's a great question. Crypto is definitely still a thing, as they say.
It's a thing.
But in terms of what it is in your portfolio and what it is to different people, it can vary depending on how you see it. And I think it's important to sort of understand the history a little bit. I won't go into necessarily the technology that backs it,
all right.
but I'll talk a little bit about its introduction into the market. So historically, when Bitcoin came in, it was extremely speculative, selling for pennies.
Yes.
And the whole pitch in terms of its value was its security, right?
Correct.
You could exchange it anywhere, no matter where you were, and there wasn't much in the way of regulation. So for a lot of people looking to move funds quickly, some nefarious individuals
who
who
bad players.
That's really where it started. But despite those sort of speculative beginnings, it has grown into a commodity of its own. I think calling it a currency, no one would do that today, just because the price varies too much, and currency really relies on stability and store value. That being said, it still has value.
Yes, well, I think the one thing that you mentioned there is stability, but also remember that big attraction of it is the scarcity, right?
That's
it's
right.
going to be 21 billion. That's total in creation. I think we're close, but it's going to take quite some time to get there. But the fact is, just like a lot of people reference gold and its scarcity, Bitcoin with its calculation is definitely scarce.
Yeah, and I think that inventory comes into play and liquidity comes into play. So where Bitcoin is going has been largely shaped by who's willing to adopt it as something that's recognizable as valuable. Because for a lot of people very early on, it wasn't valuable at all. That's why it was selling for micro pennies.
Correct.
Now you have institutional adoption, right? You have big players like Fidelity and Schwab looking into incorporating these into ETFs. And what that means logistically, and it's important to understand this, in order for those ETFs to have liquidity to buy and sell into them, those institutions have to hold an inventory of that particular asset. For a stock, it's shares, but for Bitcoin, it's actually buying Bitcoin. So when institutions come in and have to create an inventory for themselves, they're taking liquidity out of the market and holding it within their own little market makers. And so that's leading to more scarcity for retail investors.
Correct.
But those that have been holding this whole time are seeing an explosion in value because the second the institutions take that out of the market, now the retail can come in and charge a premium in order to abide by those retail traders.
So we've established crypto in particular. We're talking about Bitcoin here is a thing, right? But I think one of the things, and for anyone listening, I mean, we got various ages of people listening, but why own it? What is the purpose of owning it? And so I think just two I have, and then I'm going to kind of let you kind of elaborate on that. Is I hear from kind of the older generation, if they're going to own it, is they like it because it's a hedge against the dollar, right? It's in case the dollar goes bust. We hear a lot of things with the debt, and we can talk about the debt, and it's a whole other animal, by the way. But we know that's not going backwards, right? We're going to see a much wider and bigger debt as we go on. So a lot of people have comfort in that, right? Well, some of our clients like gold, but this is kind of in a sense replace gold for some of the younger generation. But the other thing is potential appreciation. What are your thoughts around those two, or maybe add some other reasons why?
Yeah, I think that's a really good question. Where does the value come from and how do people come to see it? And I think that gold is sort of a unique example because there's no real societal need other than scientific applications for gold to be as valuable as it is.
Sure.
It's really people looking at it and there being an historical context and people saying this is valuable and strapping a price to it. And then as people buy and sell it, that creates more and more value because it either leads to more scarcity or higher inventory. One of the two.
Yes.
To a certain extent, Bitcoin trades like that, right? The more that's out there, the more the value goes down. The less that's out there, the more the value goes up. However, the difference is in where it finds its place in society. So
Correct.
If Bitcoin becomes a store value that demonstrates it's able to hold on to value for long periods of time and not just like a roller coaster, but actually be able to hold the value.
Sure.
Now all of a sudden you have something that holds value that's freely exchangeable and securely exchangeable. That's actually a very valuable asset. However, it's speculative because it requires adoption in order for it to retain that value and continue to increase in price. So from an appreciation standpoint, on that second leg of that question, Where is it going? Does it have room to appreciate? The answer is yes.
Yeah.
As institutions start adopting it, the price is going to go up because they need to fund their inventories. And coincidentally, as people start exploring it as one of the assets they hold within their portfolio, there'll be more purchasing of it. So the price will likely go up in the long term, assuming there's no big negative explosion that leads to people stopping to use it.
And so we had a scare here last year, right? We saw, and it reminds me to remind everyone, one of the biggest differences right now with Bitcoin and gold is, Bitcoin is still a 90% vol asset, which means it can fluctuate pretty big. Now, with the institutions coming in, the ETFs coming in, I think that volatility will ultimately smooth out, but it's still much more volatile than gold. You don't see gold fluctuating that big up and down. So that's probably a bigger difference there. But I think longer term, if this continues on the track that many people think as far as ease of use, and I have used crypto to make purchases, I've sent wires, I can tell you it's much better than the archaic banking system. You can get things done within seconds. I can do it on my phone rather than have to go in the bank and do a wire. So I think adoption is going to continue, but so that leads to the appreciation argument probably being pretty valid later down the road. And I look at it as a long-term asset. It's still a long-term asset.
That's right.
So either way. So kind of that leads me the next thing is, how much should you own? And, that's a great question. Back when we had the radio show, I had Matt Hogan. He's with Bitwise. And so he's kind of one of the leading authorities out there. You've probably seen him on CNBC. And one of the questions I asked him on the show was, what percentage should a normal person that's looking to allocate money for whatever reason, that appreciation or a dollar hedge, what percentage of your portfolio? And so Matt actually wrote the addition for the CFA, the Certified Financial Analyst. So that's the biggest designation in the financial industry. He wrote for the CFA manual, and he put in there about 2 to 3% of your total investable net worth. And I thought, that's a great reference. Many people, and we've heard the stories, especially as when Bitcoin was back in the cents, a couple cents and a couple dollars, people had a lot more than 2 to 3%, which is why everybody was freaking out when it went down this last time. Well, if you had 2 to 3%, you don't worry about that. And you have 2 to 3% because you're owning that against some of currency depreciation. You hope to God you never use it for the reasons you probably own it, right? But that's why you have such a small amount. So I kind of echo that. I don't know what your thoughts are on the percentage allocation.
Yeah, I agree with the percentage because it's still a speculative asset, and that's how it needs to be treated, right?
Yeah.
You wouldn't go all in on something that you're not really sure where it's going.
Correct.
But that being said, there is a risk reward there, and 2% makes sense. I think having a minority stake relative to your total portfolio is where it should be if you're going to have any exposure to it at all.
Correct.
It's a complex sort of valuation scheme at the moment, because if you think about it relative to the dollar, everyone's talking about CPI and inflation, gold, its relation to the dollar, Bitcoin, its relation to the dollar, and things like that. Crypto tends to go up when inflation data is negative. Like if you have negative inflation data, and by that I mean inflation's starting to come down,
sure,
Bitcoin goes up.
Yeah.
However, inflation goes up, Bitcoin starts going down. So it tends to go up and down right now with the dollar itself.
Yes.
And that's because its value is still very contingent on people buying into it. So until we reach a sort of stabilization where it becomes part of a more intrinsic bartering system or transfer system, you're going to have more parallels than differentiations between the US dollar and where Bitcoin goes from here. But that being said, there is a market for it that the US dollar does not cater to. So the US dollar may be great for international trade, but Bitcoin right now is more for just moving value from one place to another. It's not necessarily buying goods, right?
Correct. Well, it could be getting your money out of a country. I mean, we know many cases. Obviously, we're very fortunate to be here in the United States. We're not trying to leave here, at least yet, but in other countries they are. Mm-hmm. And probably the last thing is basically how should you own it? I mean, you got wallets, which has been a common theme. Cold storage, it sounds great. No one's really been able to truly explain that to me. Yeah. Okay. I mean, it's just a little challenging, right? Cold storage. And then, of course, now, which I think a very prudent way and an easier way is going to be within the ETFs. Mm. And then maybe I'll throw this one at you. It's just, what type of accounts? Where should you own that, right? Mm-hmm. And so maybe kind of elaborate on kind of how you could own that or where you should own that.
I think that if you are well experienced with crypto, you probably have your own system worked out.
Sure.
But if you're new to it or you're trying to figure out how to integrate it into your portfolio, you want to look for something secure with a trustworthy custodian that has inventory and liquidity. Because the whole thing with these cryptos is that they tend to move in what the investors will call cycles. So there's periods in time where there's like halvings, which basically mean that it becomes less profitable to mine, and so there's less in circulation, and so the prices start correlating upward.
Exactly.
And so what you want to do is be able to cash out during those periods when you need the money. The last thing you want to do with an investment when it's trending down is sell it, especially if you believe in the investment. You want to hold it. Yes. So that being said, the best place to own it is a place where you feel comfortable you're going to be able to sell it and get a quick turnaround. Because until Bitcoin becomes freely exchangeable for goods, you're going to need that US dollar. So you're going to need to liquidate in order to buy bread. And that's what it comes down to. So I would pick a trustworthy custodian, a digital wallet that allows you to liquidate quickly when you need to, and a turnaround where it clears quickly. I mean, that's really what you want to be looking for.
Well, Robert, always good to have you. I think those are good answers and good questions, and hopefully that does help everyone kind of understand, whether or not they should have cryptocurrency, and in particular Bitcoin as well. So thanks for joining me, and we'll talk to you soon.
Happy to be here, Mike. Thank you.